Since 2017, GST Act has been amended nearly 1000 times. Thousands of clarifications and other supportive things have been also issued for the understanding of this act in detail. Now, what if I told you that there is yet another change that has happened? A clarification has been issued from the government's end with respect to the rate of GST, which is now again going to impact the common people. Many of us love to dine out and take our family and friends to restaurants and spend time there. And of course, we pay the bills in these, including GST. So what if I tell you that from April 2025, there is going to be a change in this particular rate of GST that is going to be charged on certain restaurant bills? It could be a pinch on the pocket of the common people because the rate of GST is now 18% and not 5%. So let's dive a little deeper into understanding what is happening this April 2025 onwards. So first of all, you need to understand that there are certain restaurants will be coming in the category of specified places and they will have a different changed GST system and changed GST rate, which of course may cost you more. So first thing that you need to understand is the changes impacted. The effect is happening from 1st April 2025. So this particular rate change that is happening from 5% of GST to 18% if they fall in a certain category or definition of specified premises. Now, restaurants in hotels. So we are talking about the hotels, lodges, basically lodging facility. Now, many people love to go to resorts, right, where you will be also relaxing and spending time there. Of course, you're not going to go out somewhere to have dinner or breakfast or lunch, right? You will say, okay, we are in the resort and we wish to have our lunch, dinner, or breakfast in the resort itself. You may order it in your room, or you may be at the poolside and relaxing and wanting to have the order where you can actually enjoy the nature or the scenery along with your food. So, what happens in the case of such restaurants which are attached to the lodges? Here, now the GST rate changes will be applied in certain cases. Now, which cases? If they fall in the category of specified premises. Now, what are these specified premises? Let us see. These specified premises are the ones where supplier has provided in the preceding financial year the hotel accommodation services. So first important thing that they need to have in these specified premises is that they are providing a hotel accommodation, a lodging facility basically in the previous year. That is the financial year which is preceding. So if you are talking of 25-26, then the preceding financial year, that is 24-25, that particular hotel has provided accommodation services. This is one important thing. Now, second thing that you need to understand is the value of this particular accommodation per unit, that is per room, should be more than 7,500 rupees per day per unit of that accommodation. So basically, one room rate in that particular hotel, even if one single room comes in the category of above 7,500 rate, then we can say that it comes in the category of specified premises. So let's suppose that it has all luxury rooms which are in the category of 3,500 to let's say 5,500, and only one suite or one type of room is coming in the category of 8,000. Okay, some let's say presidential suite category type of you can say room which has the charges of 8,000. So it's going above 7,500. Rest, let's say maybe 39 rooms are having the rate between 3,500 and 5,500, and only one single room in the category of 8,000. Does this fall in the category of specified premises? The answer will be yes. Because even if one single room, one single unit, or you can say accommodation is having the rate above 7,500, then it falls in the category of specified premises. And this is applicable for which year? For the financial year 24-25, if they had this type of billing. Got it? So 25-26 onwards also, it will apply if it is applied in 24-25. Now coming to the category, another important thing is for specified premises. So second category that we can say is supplier has provided in the preceding financial year, again, value of accommodation above 7,500 per unit of accommodation. But in such a case, the person supplying hotel accommodation has filed a declaration. Okay, we are talking about declaration within the specified period of January to March 2025. So the same thing applies, that is 7,500 rupees above that 7,500 rupees category per unit per day billing is there, and the person supplying that hotel accommodation has filed a declaration that we have such type of specified premises. So then basically they will have to pay the GST at the changed rate. Now coming to another third point of for specified premises, what falls in the definition of specified premises, let's see. The first thing, again the same thing, person supplying hotel accommodation, right? So they are having lodging facilities, registering. So now they are registering under GST Act and has filed a declaration that they have the premises which are called as specified premises. Got it? So basically, either one thing, they are already in the business and they have that type of billing in the previous financial year. Okay, so 24-25, if they have billed any one single room also above 7,500, then they will have to charge the new rate of GST. Second category that applies is if at all their room rate is not 7,500 in previous year 24-25, but they know that in the current year, that is 25-26, they may be billing at the rate of 7,500, or rather you can say above 7,500 rupees per unit. So in that case, they file a declaration between the period Jan to March and do the billing and accordingly have the new rate of GST. This is second. And third one is, now that person is registering under GST. He's not yet registered. He's registering under GST. He's the supplier of hotel accommodation, right? And he has himself declared, that person has himself declared that we have the categorization of specified premises. So these are the three things that you have to remember for specified premises. Next is important points that you need to consider is that the hotels with even a single room, as I told you, it need not be like all rooms are at the rate of above 7,500. Even a single room, if they have charged at the rate of above 7,500, then yes, they will fall in the category of specified premises. And in case of specified premises, the restaurants, now we are not talking about lodging, right? We are talking about restaurants. If the premises also has restaurant facility, now these restaurants need to charge the GST at the rate of 18% on the bills. But an important point, an important thing to remember here is they get the input tax credit. So probability is that with this input tax credit, they may also pass on the benefit to the customers. Now let's see how they will pass on the benefit to customers in the coming part. So in this clause does not apply, then the rate of GST remains 5% without input tax credit. So currently, as we have 5% rate applicable, if this particular clause is not applicable of specified premises, then naturally you're going to continue charging on the restaurant bills only 5% of GST as usual without taking input tax credit. So if you fall in specified premises, 18%. If you don't fall in specified premises, then 5%. Now, cost obviously is going to increase, right? For the customers, the cost is definitely going to increase, and most of the hotels may not be in a position to pass on the benefit of input tax credit because already they're consuming that input tax credit in the hotel rooms. So rooms are also charged GST, and whatever GST you're paying on the rooms will have a subtraction of the input tax credit which you're taking. So if you don't have any spare or extra input tax credit, then obviously there is no way in which you are going to pass on the benefit or credit to the customers. But just in case there is a surplus of input tax credit on the restaurant, on the hotel rooms or any other supplies that are being made to the restaurant, then yes, the input tax credit benefit with proper strategic planning can be done, can be passed on in the format of reduced amount to be charged to the customers. Of course, they won't have, since 5% and 18% gap is quite a lot, the customers will have to bear the cost, but the cost may come a little down if at all the input tax credit benefit is given. So speaking of the impact, who are going to face that particular impact? Of course, the super rich and people who are already enjoying a lot of luxuries and things in the hotels, they may not feel so much of impact of this differential rate. But if we are talking about the mid-range guests, the mid-range guests may find this cost increase non-viable. They may not find it very convenient for them. Then coming to another important thing is connected to conferences and bookings. So many companies organize events, right? They have their corporate parties, get-togethers, meetings, or other such things in the premises of the lodging facilities. That means there is a lodge also and there is a conference room also. Many hotel facility, many hotels currently have these kind of facilities, that they have lodging facilities, they have a restaurant, and they have conference rooms, meeting rooms, or wedding halls, whatever the case may be. So in such cases, the impact definitely will be faced because you are paying for the food bill, and food bill will increase by that from 5% to 18% because of the impact of these specified premises, right? So GST rate change will happen in those cases. So bookings which you're going to make from April 2025 onwards may become costly because of the bills at 18%. Now we need to understand how these hotels can make the plans so that they don't have the customer base reduced, because of course they want business, right? They cannot avoid the customers because of the increase in GST. If increase in GST is causing customers to walk away from them and going to other hotels, then they should have a thought process and they should have proper planning done. Now, how to do that? The first thing is method of bundling services of lodging and food. So they don't charge extra for food, or they don't show food charges extra. They're going to bundle the services and charge together so that you don't have issues with the billing. Secondly, keep the accommodation rates below 7,500. So just in case you just have one room or two rooms which have the increased rate above 7,500, then you may rethink of having the accommodation rates reduced below that 7,500 amount, so that your other restaurant and other lodging facilities are not affected, right? So just because of two, three rooms, if you're facing difficulties, you will have to rethink it. Or in other cases, like suppose all your room rates or most of your room rates are being charged at near about 7,500, let's say 8,000, then you will have to rethink, right? You may have to bring it down to 7,500 or below that, so that you don't face the impact of these rates. Of course, here also now the impact of rate is not connected to lodging facilities. Please keep that in mind. If the lodging facilities are there and you don't have a restaurant, you don't have to worry about it, right? The worry problem that is happening is if you are having lodging come restaurant, right? So because of your lodging services, your restaurant is getting impacted. So if you are having a hotel, basically where you are providing lodging facilities, but you don't have a restaurant attached to it, then no worries. Continue doing as the billing as you're doing right now. But if you have a restaurant facility, then you will have to rethink of these revisions, what I'm talking about here, right? So the impact is not on lodging rates, the impact is on the restaurant rates. Then revising the restaurant rates without passing full burden on customers. As I told you that if you have some input tax credit benefits, then take that benefit, and at the same time plan your total bill amount, the food bill amount, to such an extent that customer doesn't bear everything, right? You may bear some part of it and some part of it may be borne by the customer. So this is how you can make the plan for that particular billing, which you have to do from this April 2025. Hope so this video will help the people who are moving to resorts and the ones which are having resorts come restaurant facilities. So you know that your billing is going to now increase to a certain extent because of the GST burden that the government has levied, from increase of 5% to 18%, right? And secondly, the hotel owners or the people who have to make some tax planning, where you have a combination of hotel and restaurant, they also can make some amount of tax planning with the help of these details that I've shared here. So hopefully, so just in case you have any questions, you can put it in the comments, or if you find this video useful, do share it with people who may like it. And at the same time, if you have not yet joined the journey of Commerce GYAN, do subscribe to this channel so that you may keep getting the updates ahead also. So hope to see you in the next video of Commerce GYAN. Thank you.